All right, whole lot to get to this week. First of all, we're going to get the S&P Global PMI, Purchasing Managers Index, private sector manufacturing numbers for the United States. That's coming out later on today. Tomorrow, retail sales. It's December. It's the festival, well, actually for November for the United States. Wednesday, the Bank of Japan and the U.S. Federal Reserve will give us their interest rate decisions. Maybe a cut, maybe a hold. Thursday, we get interest rate decisions from Mexico and also from the United Kingdom. Andrew Bailey, Victoria Rodriguez-Queja. We'll get those on Thursday and see what happens. Cut, hold. It's a lot to factor in. Friday, we get the Personal Consumption Expenditure Index core for the United States and also LPR, the loan prime rates, 1 year and 5 year from China. So a whole lot to dish out this week. Let's move quickly to oil prices. Whole lot of news coming out in the oil sector, particularly from Nigeria. Brent crude 70.81. West Texas Intermediate 70.81, Brent crude 74.14, natural gas at $3.19. So as has already been reported, front page of today's This Day newspaper, Nigeria's newspaper of record, Vice President Kashim Shettima. Actually, before we get to that, there's even bigger news. Shell, let's put this up from the company right there. Shell invests in the Bonga North Deep Water Project in Nigeria. Shell Nigeria Exploration and Production Company, SNEPCO, a subsidiary of the Shell PLC, has announced a final investment decision on the Bonga North, which is a deep water project off the coast of Nigeria. And they say that, of course, this is going to basically be with an FPSO facility, which Shell, operates with a 55% interest. Big news with respect to investment coming into Nigeria's oil and gas sector. That, of course, has been jointly operated between Shell and, of course, the NNPC on behalf of the federal government of Nigeria. So big investment news there. And so in that regard, also with the Vice President Shettima, a $315 million vessel inaugurated in Dubai. Front page of today's papers is from the Oriental Energy Resources Limited. It's got a capacity of 1 million barrels per day, should add about 30,000 barrels per day to Nigeria's output. It departs for Nigeria in the first quarter of 2025. And of course, an FPSO is a floating production storage offloading vessel. So lots of oil and gas news there. We come to the Asian markets. It's all bearish as a result of one, we got the impeachment story coming out of Korea, which happened over the weekend. President Yoon, we'll have to get the constitutional courts to decide that, but also data from China, which disappointed market. Let's just touch on retail sales before we quickly get to our guest. 3.8%, well, 3% year on year. The forecast for November was 4.6, and a big slowdown from 4.8. Let's join Shaun Richards, who is an economist in London. Shaun, good morning to you. Good to have you on the show. I wanted to get your thoughts on the data coming out of China. Markets are down. The mood seems to be disappointment. What's your take on the numbers that have been coming out there?
Thank you and good morning. For me, the issue with China, and this has gone on for 2 or 3 years now, is that they're in a type of balance sheet recession. For those that have followed the experience of Japan, what's been called the lost decade, now that's gone on for 3 decades now, it's a similar pattern. So what we've seen is a property market crisis, and what that's done is it's tightened the money up. People may not realize, but there was a spell, because China put so much emphasis on the property sector, that it was around 30% of GDP. So now, whilst it's not an outright bust, the thing is that they're no longer cheap and easy gains. Things have tightened. And now we've also seen an announcement this morning of property prices falling. So this is putting pressure on the other Chinese numbers. One of the ways of looking at the Chinese economy does really well for exports. Now that's an issue around the world because China's looking to export a lot more electric vehicles, for example. But in terms of China at home, consumption's struggling. Now, retail sales month on month are a bit of an erratic guide, but I think the overall picture here is a signal of things getting tighter, which, of course, as you said, it's the world's second biggest economy. So that has problems for everyone else as well.
Thank you so much for that, Shaun. I want to get to the UK. Rachel Reeves, Chancellor of the Exchequer, sounding pretty bullish about the Canal Plus listing on the London Stock Exchange today. But there are a lot of firms that have left for the US. What do you make of it all with respect to the outflow, the delistings we've seen on the London Stock Exchange so far this year?
Well, the problem for the FTSE 100 is, for a long time, it went nowhere. The previous high was in 1999, like the Prince song, if those of you that remember that. Whereas it's 2024 now, isn't it? Now, earlier this year, the FTSE 100 picked up and now it's in the 8,000. So there's been a gain. But that's been one of the factors that there hasn't really been money to be made. If we look across to the US, it's been boom time, hasn't it? Almost every day, it feels like we're hearing of some all-time high in the US indices. So I think there's a trend there. And also it comes from the fact that growth in the United States has been very good. And of course, that has tempted companies over there. So that's the picture. And it's in terms of the City of London, it's doing quite well in terms of foreign exchange, bond trading and things like that. But the equity market's been a struggle. Part of it is American strength. Part of it, I think, actually is the UK needs to sharpen up a bit and find better ways of encouraging it.
Still in the UK, the insurance sector, this multi-billion-pound bid from insurance giant Aviva for Direct Line, £3.6 billion offer. I think they have until December the 25th to close the deal. There seem to be a lot of worries about job losses in this because of this deal as a result of duplicate roles. What do you make of it all? Do you share those concerns?
Well, first, there's something a bit hopeful for your previous question, because people are bidding, aren't they? So they're buying stuff out, and there have been other bids around. So maybe that's hopeful for the stock market. The employment one's more troubling, though. The UK had GDP numbers on Friday, and that showed for October a minus 0.1%. Now, maybe that was within the margin of error, but that's 2 months in a row. And if you look into the detail, it was actually firms in the employment sector were struggling as well. So that's a sort of ominous forward-looking indicator for what employment might do in the UK next year. And there are concerns in other areas too. So this insurance news, I think, feeds into the wider picture of people now being concerned if we'll see an employment drop. For those of you that follow my work on central banks, this makes me smile. Why do I say this? Because they were worried about this sort of thing 6-7 months ago, and then it kind of didn't happen. And now it is. Why? Well, things like employment are a lagging indicator. They happen afterwards. And so they've got themselves a little bit out of phase. And we'll hear more from them, as you said earlier, at the end of this week. But for the UK right now, there are concerns about employment, yes, overall, everywhere, not just insurance.
Speaking of more concerns, water bills. Environmental Secretary Steve Reed says your bills, the rest of the UK, could go up by 20% over the next 5 years. According to what he says, it's because of neglect and underinvestment in the UK sewage system. And he says people are going to be angry over this. What do you make of this development here?
Well, there have been one or two bits of spending back in the day. For example, there's a big, I'm a Londoner, there's a big London ring main being built over the last years and indeed decades, I think. But the overall picture of the water companies is, I'm afraid it's a bit of a national scandal, because they've been allowed to put money out in dividends and so on, and they haven't really invested in the understructure. There's been quite a while, for example, since the UK built a new reservoir. Now, for those that don't follow the UK weather, this year it's followed the stereotype. We've had lots of rain, so that's not a problem. But the overall picture, because the population's grown, is that we haven't really spent the money to keep the infrastructure up to the larger population now. So it is a problem. They've put the money elsewhere. And I'm sure over there it's the same as here. People are looking at thinking, why have we got to pay? But that's the way it works, isn't it, usually?
And when you put this all together with the other reforms, the £40 billion worth of tax increases, we had you on the show last time to talk about that one. Rachel Reeves talked about that. How do you fit this all into your outlook for the UK economy as we go into 2025? Well,
for those that don't know, I'm a former bond trader. That was my sort of specialist market. And I note that the UK 10-year yield is 4.44% this morning. You see, these things matter when they last. You issue new debt, you renew stuff and so on. And so it's a sort of little thing of tightening of your collar on you. And there's quite a few messages like that at the minute. On the other side of the coin, the budget itself did boost growth a little bit for next year. So we might bumble along with not very much. Looking further ahead, I'm more optimistic because the money supply has been improving. So there's more hope for 2026. But we don't know at this stage whether that will turn out to be growth or inflation. Obviously, hopefully growth, but we don't know that. So what was in the UK a really good picture in the first half of this year, sadly, as we come into Christmas, it's not very Christmas message, is it? Things have got a lot tighter, more awkward, and hopefully we'll manage some growth, but probably not very much.
Speaking of which, Shaun, just real quick, what about the debt, the public debt to GDP? Does that factor into your outlook for the new year?
Yes, partly in the way that I was just describing, because the levels have risen, we have to renew maturing bonds more often so that when the yield's higher, it comes around more quickly. I always called this thing as being something like rolling a snowball down a hill, that it takes a while to build up. But these days it happens a lot quicker, partly because of the COVID situation and all the borrowing. That's one issue. And there's another factor in here that doesn't get much publicity. With the Bank of England reducing its balance sheet, it's in effect selling as well. So there's a sort of double pressure. And so this is a thing that, again, is building along. And looking ahead to later this week, I don't think they'll announce it this time, but I'm starting to wonder if they'll abandon the balance sheet reduction as they start cutting interest rates. Again, a cut in interest rates this week is not a done deal, but over a period, I'm expecting some more cuts. And so it's a sort of, they're tightening and easing at the same time. Isn't very logical, is it?
Thank you so much for mentioning that. We indeed do have that Bank of England decision later on this week. But Shaun, I never got a chance to ask you this. What are your thoughts on Bitcoin? I just want to get your thoughts. It's over 105,000 now. I guess, perhaps because of the Trump factor. What are your thoughts on Bitcoin? Do you warn people about its volatility? How do you see the Bitcoin rise?
Well, there's various ways of looking at it. One of them is as a theoretical economist, where there's all sorts of issues. But it's also true the price is 105,000. One of the factors is, back to your first question, I think some of the buyers have been the Chinese looking for a way of getting the money out of Hong Kong and places like that. That's been a factor here. Stress things that are called safe assets. And I know this is a real irony calling it a self asset because it simultaneously is or isn't. Always get a boost when there's trouble. Again, as a Londoner, may not be aware, there's a big development at 9 Elms, which looked like it was never going to go anywhere. But because of the issues in Hong Kong, it filled up. On my mind, it's not far from me. Back to Bitcoin, I think these factors have fed in. And conventional economics has mostly completely failed here. There are all sorts of issues with it. It's one of these things, isn't it, that shouldn't work in theory, does work in practice. The problem is when you get a surge like this, and I thought the minute 100,000 got near, we'd go above it, someone would take it above it, is what happens now. Because you see, there are two sides to this. Those that have been in Bitcoin have done really well. Anyone watching this, well done. Better than me, I haven't got any. But now, is paying 106,000 a good idea in dollar terms? So as you can see, it's like the song, it was Johnny Nash, I think. There are more questions than answers.
Lots of pop culture references from you. We got the Prince from 1999 and Johnny Cash. Shaun Richards, economist in the UK. Always a pleasure having you on the show. Thank you so much for your insights.